Welcome to Tradespoon. I'm Vlad Karpel. I'm CEO and founder of Tradespoon. And today I'd like to go over current market conditions and any questions you might have about your subscription. Talk about the market conditions, what to expect short-term, long-term, and which strategies work and do not work in the market. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Always want to welcome new subscribers. This is my brief bio. I was Executive Vice President, Head of Technology at Options Express from its inception through 2007. Options Express was an online broker-dealer acquired by Charles Schwab. Disclosures are very important. I'm going to go through some trading example. Very important to read the disclosures. If you're new to trading stock and options, please pause the screen and visit optionsclearing.com. This is a link where you can explains the risk associated with trading stock and options. And I'm not the rest of the disclosures. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account, based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. All right, before we jump into portfolio, let's talk about market. If you follow my latest blog or video blog, or we're part of the live trading room, we said that still another leg up in the market, potentially retesting February high, right, as a core scenario. And we are in the process of building the top. So earnings season just started. We did have banks announce earnings. So far, it's been, Todd mentioned JP Morgan, kind of Wells Fargo. I mean, I think the bottom line, it's better than expected. JP Morgan actually had a very strong earnings despite all the turmoil in financial markets, higher deposits, haven't seen any significant reduction in loans, and generating a lot of cash, a lot more than has been expected. And you have a strong rally in JP Morgan, up 7%. Again, beyond 2 standard deviation estimated move, JP Morgan hasn't rallied 7% in quite a long time. And outside of JP Morgan, Wells Fargo also had a strong earnings, but it was up 3%, turning negative. Citigroup continued to hold on to its gains, so Citigroup did better than expected. PNC fluctuating between gains and loss. It was up pre-market, I think, close to 4%. Now it's down almost 2%. In United National Health Group is down 2.5%. So far earnings kind of a mixed bag, I would say. And in terms of price action in spiders, we have retested briefly in the morning after better than expected earnings, as high as 415 session high, which corresponds to year-to-date high around 416, 417. So for all practical purposes, again, we're building the top, market is building the top. Retail numbers came in, slightly worse than expected. I think that would be a better explanation, slightly worse than expected. But if you remove the auto sales and remove the energy, then it's, I think, a little bit better than everyone feared, right? A little bit better than everyone feared. And you have, again, kind of a typical recessionary trade, right? Where treasury sold off, and at least originally spiders and technology were up. Now technology and spiders are pulling back. Interest rates are still staying at this key overhead resistance. We talked about 3.5% on 10-year yield has been a major overhead resistance for the market that spans over back to June. Still unable to break through this level. 2-year yield staying above 4%, but again, retesting the recent highs around 410, 415. So we'll see where the market closes today, if we do have a reversal intraday. But for now, assuming we're going to close at this level, this is, again, we're back in the range that we were talking about the day before yesterday, which was 412 and 406. So if we close at this level, that would probably be bearish for the market, right? Because we retested February lows and reversed. If we are able to retrace back all of the gains and close at 415, That would be a win for the bulls. That means we are close to the February high. We'll see where we're going to close. Beyond that, beyond the February high, we have the next level would be 430, right? The next level would be 430. So let's talk about, I guess we are middle of April toward middle of May, right? So on one hand, the next level would be 430, right? Maybe 20 points to the upside, or 390, 20 points to the downside, right? So by middle of May, do you think we're going to have scenario number one or scenario number two? That's short-term trading, right? I mean, bulls have market has been extremely resilient, right? The idea is don't fight the tape. It did break the downtrend multiple times this year. January, February, it broke the downtrend again. Earnings are not as everyone feared, right? JP Morgan had a pretty strong earnings. The rest of the companies kind of a mixed bag so far, mixed reaction. So let's see, how many of you think we're going to get to 430? How many of you think we're going to get to 390? Which event is going to happen first? Do we pull back to 390 first, or do we get to the 430 in the next, 2 to 4 weeks? That looks like ALLY from last earnings. Yeah, I mean, we're getting caught in these exaggerated moves. I mean, JP Morgan is definitely a positive surprise. I actually thought the risk would be to the downside, but I guess financial instability, nobody wants to call it crisis anymore, but financial tremors happen end of March, and doesn't look like it has any material impact on JP Morgan current quarter Q1 nor forward guidance Q2, right? So far strong. Where do I see JP Morgan closing today? I mean, it's a typical kind of move to the upside, right? It is approaching a lot of overhead resistance around 138.61, and despite market being down, JP Morgan continues to go higher. So at this point, I mean, I think the pattern is continue to go on higher, or at least probably close at the current level. So I think it will fluctuate between maybe 140. I mean, it could be as low as 136, right? So far, kind of JP Morgan, there's a divergence between JP Morgan. It continues to make session highs. The opening session was 135. So pre-market, 135 was the session. Again, one way to do this, if you do see stock going up to 134, 133 beyond your stock, right? I sold. Let's look at the trade. So it's very important to kind of listen to the conference call, or at least around the, not even listen, but just to see the price action around the conference call. So JP Morgan right now, well, right now it's at maximum loss, right? So I sold 138, 133 call, right? So at this point, it's at maximum loss. It's at 138. But pre-market, before market open or right at the open, it was at 135.30. So again, usually what is, if you see this exaggerated move to the upside and stock has delivered very strong top line, bottom line, and projections, then most likely it's going to continue going higher. So in pre-market session, even if you bought it at 136, let's say, then you would limit your losses to $3. Right now, it's kind of at full loss of 4.5. So that's something to consider. Again, kind of watching the pre-market session and get into a cover call. If you didn't, then right now it's at maximum loss. I mean, can it reverse down? Maybe, right? It's kind of it's not making new highs in the past hour and a half, right? It's not making new highs. Other banks did pull back, so potentially it could pull back to 136, right? 136, 135, but On the other hand, it's outperforming spiders, right? It's outperforming spiders, and if a lot of it is going to depend on spiders, right? Spiders basically broke through the overhead resistance right now, right? They broke through the 411, and now they're pushing below 411. So where JP Morgan is going to close, a lot of it is going to depend on spiders. So what I usually do, I would look at the spiders. Model predicted 415 to be overhead resistance today, right? Before even earnings started. 415, and support is 407. So pretty wide range because of the earnings, makes sense. And neutral trend, right? Model sees that there's no clear win short term between bulls and bears. So we did reach 414. Model basically did, I think, I would grade it A. It did a great job seeing that momentum can carry the market to 414 based on the current price action. And obviously at 414, consider going short. And now we are trading below this breakout line. So if it just depends where the market is closed. If market closes towards the 414, 416, then JP Morgan is going to close to, upper range 138, 139, 140. If this reversal continues and we do break below 112, model basically sees potentially can reach 408. Right, so if the sell-off accelerates to the downside, JP Morgan most likely will pull back to the session low. If we do have a reversal intraday, right, during lunch, if we do reverse and close towards 414. So for now, I would watch this level, right? That's an important breakout. Right, we've been through this level for the past couple of weeks, unable to break through it, broke to the upside for a couple hours. Now the question is, are we going to bounce back? Are we going to bounce back? Right? Because earnings for the most part are better than expected, at least JP Morgan and Wells Fargo and Citigroup. Or do we pull back to the downside? So that's how I would determine next price move for JP Morgan. Which provides them bad parts, causing more delays. So more delays on 737. Boeing is pulling back. Thank you for letting me know. So pretty sharp pullback in Boeing, down 6%, pulling the market. All right, so 390. So we have 390. Some of you said 390, 390, 430. That, yeah, I mean, it would be, maximum loss is $450. So it's a little bit more than on a $10,000, it would be more than 2.5%. If there is no reversal. If there is a reversal, then maybe limits to 200. Maybe we will get $250 loss. But yes, I agree. Next week, spiders should hit 400. So we kind of have a mixed bag of, half of you said we're going to 430, half of you said we're going to 390. I'm in 390 camp as well, right? I think based on the current price direction, I'm actually surprised, right? Retail numbers were expected to be lower. Bad, and they were, I think, better than expectations. And obviously, JP Morgan, hit it a home run, not a single, not a double, but a home run, right? JP Morgan usually doesn't move 8%, hasn't moved 8% for a very long time during its earnings. So, and the market, at least as of right now, pulling back. So, not a lot of conviction behind the bulls and behind the soft landing narrative. Yield, right? The pattern right now, the yield is higher yield. TLT sells off, so in theory, spiders should rally, right? Kind of a recessionary trade. For now, it's both trade. People are selling their bonds and they're selling their spiders, QQQ, which I don't think is going to last a long time. Right now, everybody's interpreting retail data. Is the good news good for the economy, or is the good news bad for the economy? Any other questions? Todd, yeah, I mean, I would always do same size, right? On a $10,000 account, it's a $100 stock, $130 stock. You probably just want to do one contract, right? If it was a $50 stock, I would do two contracts. Are you projecting spiders by 515, 433, 90? Yes, Shazad. So my projection is that by middle of May, maybe end of May, we're going to be closer to 390 than we are going to be to 430, right? So I think the next, if we're going to have similar reaction, right? We had Progressive yesterday, announced earnings. So insurance kind of had a pretty big pullback, Fastenal, industrial. I mean, earnings season just started. So there are two scenarios. Either people are going to start selling during earnings, or they're going to wait till mega cap technology stocks going to announce earnings. And Fastenal actually turning positive, right? So after a big sell-off. So that would be my expectation. But so far, the rebound in yield is very small, right? I don't see a big rebound in yield, and we're still sitting at these major support level, right? Very weak rebound in yield. So far, very weak rebound in IWM, right? Small cap stocks, very weak rebound. And then even banks was today better than expected. JP Morgan, better than expected. Citigroup and Wells Fargo, also very weak rebound. I would expect Russell 2000, XLF to be more higher, up more than just 1%. So far, pretty weak rebound across the board. Joseph, wouldn't be surprised if this market threw us a curveball. There's always, right, pendulum always swings to extremes, right? But I'm just not sure what other catalysts could be in the market. Well, earnings, right? Obviously earnings. That would be the next earnings. We don't see a lot of, I don't see any data that, maybe flash services PMI for April, right? That could be, right? Services, the number came, continue to going down. Manufacturing continue to look to contraction. Next Friday, see services, April services flash PMI. That could be a trigger, right? Again, if it's a bad news, it's probably bad for the market. Good news probably will be good for the market. That's the new pattern. But for the most part, our earnings. Next week, we're going to have a lot of more earnings announcements. And so far, the response is very kind of timid, right? You would expect with banks being so oversold and JP Morgan up 7%, it's very hard to understand why market is not higher more, right? And also Citigroup had a strong rally. Wells Fargo was up, I think almost 4%. PNC was up 4%, but still you have reversals and market continue to deteriorate. Broke rule. Okay, Todd. Kevin, okay. Yeah, I'm not sure if it's a completely irrational exuberance, but market is extremely resilient because a lot of people do believe in soft landing, right? Unemployment is low. Look at JP Morgan, despite all the financial issues, everybody was afraid of all loans origination to drop. There are no signs of that. JP Morgan basically said we don't see any signs of that. And they're, printing money. Obviously, we anticipated, increase in deposits. So far, banks are doing well, right? So there is a reason for this market being resilient. The reason it's down probably because it's just, it's up from the October lows, it's significantly up, right? Significantly up, but you can see it's losing momentum. Basically, in 3 weeks, assuming we're going to close at 412, in 3 weeks, we really didn't go anywhere. Well, actually, we didn't go anywhere since November of last year. All right, I do have to leave in the next 10 minutes. So I want to make sure I answer all of the questions that you might have before we leave. In terms of trades, again, JP Morgan, usually I do like selling out of the money options. If you were at my closing bell, you've seen that, if you do multiple earnings announcement, then kind of the law of large numbers. But JP Morgan, obviously, I did not anticipate such strong results. I don't think anybody did, honestly. At this point, it's at maximum loss. So the only hope is that spiders will bounce back, right? That spiders are able to bounce back. Sorry, that spiders continues to go down, right? Because this is a bearish trade. So if spiders continue to decelerate, right, and pull back, then maybe JP Morgan can pull back. So on the upside, on the downside, I'm already capped. But if it does pull back below 138, then that would be a win. Visa, I closed Visa, right? It had a strong rally, continues to rally. So this is an example of active trader, that the stocks that active trader picks can continue going higher. I've done several stocks, and then Delta Airline was I closed it yesterday. Outside of that, in terms of positions, pretty bearish, right? At this point, most of my positions are bearish, except QQQ put spread in April. So short term, I still think we could continue testing year-to-date height, right? Spiders around 418. We could continue gravitate toward that level like we did today. But beyond that, I don't think there's a lot more momentum to the upside. So JP Morgan, I'm going to close today. Be careful with the 133 call, because if we do close at 135 and you don't close the short call, potentially on Monday we could have a rally. Schwab is announcing earnings, and then the loss would be more than $450. So by end of the day, I'm going to close JP Morgan. If it does pull back to 136, 137, great. If it doesn't, then I would just close at the half an hour, 15 minutes before market close. So that's my goal with JP Morgan. Northrop Grumman, still bullish on the stock going into the earnings. QQQ is my bullish position. April, QQQ is staying above that level, 310 level. So we'll see if it's able to hold on to the 310, 315 level going into the next week, right? So that's the last bullish trade I have. Let's see, June, I'm bearish. I still think we'll break the 300 level by end of June. I'm have higher conviction going into September. Silver, if you're not comfortable trading QQQ puts, again, one of the 4 positions I propose to, at this point, you want to be, I think, either market neutral, right? Because you see momentum is deteriorating behind the bulls. We had a strong rally. So if you're in soft landing, I would be market neutral. If you're in a bear camp, I would start adding to your bearish positions. All right, so one way to do it is to add SH. Right, and you could be slightly bearish, right? If QQQ is down 0.5%, you could be up 1%, right? Something along those lines. Silver, again, continues to trade higher. I would be a buyer into pullback. TLT pullback today. I would be a buyer into TLT. Probably will buy it by the end of today. And still bearish on banks, right? So far, kind of mixed results. XLF is up 1%. We'll see we still have few banks announcing earnings, but I think there's limited room to the upside, and I think there's more room to the downside, especially going into September. Other than that, any questions? Joseph, if you have account like 401k, longer term investment, I still propose only 4 positions, because I mean, we could argue whether we're trading in a bull market or bear market. I still think, in the past 12 months, right? We don't have to argue about that, but in the past 12 months, right? We're talking about QQQ. We didn't really go anywhere, right, since last April. We're trading exactly at the same level as we are in the past 12 months. One has to assume that in the next 12 months, we might be also trading at the same level. So if for 2 years, we're not going anywhere, right? For 2 years, we're not going anywhere. There's no reason to have more than 4 positions. So for that reason, I still think if it's a long-term investment, you have 4 positions. Maybe once we reach 260, 280, and you think that's the bottom, maybe you start adding, right? But at this point, I think market is overbought. I would just have 4 positions, and out of these 4 positions, I would have 2 that are bearish, like TLT and silver, right? Some bonds, some precious metals, and 2, maybe like Bitcoin, maybe like Boeing, fine. But I would wait for bigger pullbacks to accumulate. What is the dollar next move? That is a very important question. I think it's higher, right? Because I think market is going to start pulling back, either this month or next month, and it is extremely oversold, right? So we do have this double bottom around 101, 100 level. I mean, if you're in a bear market like I am, the next move is this way. Obviously, if you're in a soft landing, you think it's the other way, right? But assuming we are approaching recession, right? A lot of Fed meeting minutes basically said that the Fed staff, they said committee, now they said no, staff didn't say that. Committee didn't say it, it's the staff members. Okay, I don't know what the difference is, but fine. So the Fed staff, which probably knows about economy more than I do, sees recession starting Q3, Q4, and assuming that that's true, and that will, I mean, it's not certainty, right? Assuming that is true or will be true, that's not factored into the price of the market, and the market should pull back and dollar should rebound back to 106 or even 110. Obviously, if that's not the case and we don't have recession and earnings are great and market, we still have low unemployment and services and manufacturing PMI starts expanding, leading indicators start expanding again because of the growing China demand, well, then the dollar will pull back and we're in soft landing. So this is a soft, if you're in soft landing, you believe dollar will go lower. If you're in hard landing, you think dollar will go higher. Usually from technical perspective, you do expect a bounce, right? It's kind of a long support that goes back to 12 months, right? Dollar's at 52-week low. Usually when you're at 52-week low, more often than not, it holds. Renata, supported resistance on spiders. So model for today identify 407 to be support, 415 to be overhead resistance. Model did a good job today despite unemployment number. How do I interpret this? That means that the earnings that happened today and the retail that happened today has no impact on the market. Market is trading in well-defined equilibrium. So your overhead resistance model is correct. We were at session high 415. That's your new resistance one. And we are fighting for the breakout, right? So bulls and bears are fighting for the breakout, right? So that's your initially support number one, the breakout. Depends on where we're going to trade. If it's below 412, then we're back to this 2-week range, right? Then 407. So that will be your support number two. So short term, immediately for day trading, you kind of want to watch this level and see who's going to win. Is it the bear's going to win or the bull's going to win? Let me know if it makes sense. All right, I do have to leave. I got to catch a flight back to Chicago. Any other questions before we leave? All right. So again, most important is trading plan and keeping the rules, right? JP Morgan sometimes rallies beyond, 2 standard deviation. right? Great earnings, nobody expected, everybody's caught by surprise. But if you follow your rules and, on a $10,000 account, you want to limit your losses to $250. Sometimes it's possible. In this case, at least right now I'm down $450, but it's all about the rules, right? And for that reason, I propose to only have 4 positions. At this point, you have 2 bearish, 2 bullish positions. And depend on soft landing, hard landing, you might have a little bit more bullish, a little bit more bearish to express your opinion. But that's how I would go into this earnings season as it unfolds next week. I think market is overextended, and I think the risk is to the downside at this point, especially as we approach in summer, right? We approach in May, sell in May and go away. April usually one of the best months. So far, it's been pretty small rebound. So I would be careful having a lot of bullish positions going into end of May. All right, that's all I have for today. Thank you very much. Have a great day, and I will see you. Thank you, Joseph, and I will see you. There's no closing bell today, so closing bell is canceled today, and I will see you Monday morning. Thank you.